All right, in this section, we're going to talk about support and resistance. Support and resistance is one of the most widely used concepts in Forex trading. It is so important that you understand this concept. So if you need to go back and watch this video a few more times, that's okay. It's really important that you understand this concept and understand how support and resistance works. Everyone interprets support and resistance differently, but let's start with the basics of how it works. In this image, you can see the market moves up and then pulls back. So this new high point here is called resistance. Then as the market continues up again, this low point right here is called support. You can see then another resistance is formed as the market pulls back, and then as the market continues up in that same trend, the support is formed, another resistance. So you can see resistance and support are constantly being formed. Now the reverse is going to be true for a downtrend. If this is coming down and then pulls back up this way, this is going to become support. And up here, once it pulls back again, is going to be called resistance. So it's the same concept whether the market is moving up or the market's moving down. Support and resistance levels aren't exact numbers. In fact, sometimes you'll see a support or resistance level that seems like it's being broken. Like in this example on the left, it looks like price is going to break right through the support line, but really the market was just testing the support and then bounced back and shot up. And in the image on the right, you can see price actually closed below the support line, but then rose back above it and then continued up. So how do we know if support and resistance was truly broken? Well, unfortunately, there's no just black and white answer for this question. Some people say that if the candlestick closes past the level of resistance or support, that it's broken through, but as you can see here on the right, it's not always the case. Because had you sold here when the price broke through this support line, you would have been in trouble because the market didn't continue to go down. In fact, it rejected right here and went up. So this is why you should think of support and resistance as zones more than lines. This will help you filter out these false breakouts so you don't get into a bad trade. In fact, a lot of times it's easier to draw support and resistance zones using a line chart, since the line chart is just simply going to show you the closing price and not the extreme highs and lows like candlesticks. You only want to plot the market's intentional movements, and the line chart will help you visually see that better. Looking at the line chart, you want to plot your support and resistance lines around areas where you can see the price forming several peaks or valleys. For example, you can see this zone right here touches a peak here, touches a peak here, touches this peak over here. Over here, we have a few peaks touching where you can see we have another resistance zone. And over here as well, you can see it touched here, and then it came back over here and rejected as well in the same zone. Same as for support, we can see some valleys here that touched here. Price was rejected here and here. You can see it's constantly hitting this line or on this zone. And you can see as well down here that we have a support zone because price came all the way down and was rejected a couple times at this zone. So here's some other interesting points about support and resistance. When the price passes through resistance, that resistance could potentially become support. So as you can see here, we have support down here, comes up. Now we have resistance as it came back down, came back up. And then you can see later on, there's actually a support that goes right in line with this resistance. So you can see resistance became support. Up here as well, this resistance, price was rejected several times here. That over here, it became support on this same line. So a lot of times resistance can actually become support in the future. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance had been holding. So you can see here that several times price was rejected. All these candle wicks here, 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 all these times here as well, even here, that price was rejected in this zone. So since this was such a strong support zone, as soon as price broke through this, it's now below it, and this would be a good time for you to sell since price has broken through the support level here and is most likely going to continue to trend down. You'll catch on to this with just a little practice. I promise it's not too hard to spot support and resistance zones. In fact, you can go into your own MT4 platform and just look back on past data and try to identify different places where price is being rejected, and you can find different support and resistance zones yourself for practice. Now in the next section, we're going to talk about trend lines, which are basically diagonal support and resistance lines. So I'll see you in the next section.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.